is there to carry out those reforms. And the longer a government stays in power, the diminishing the returns to power.
So is this wisdom right now, you think, one of the reasons as foreign capital is leaving India? Are they looking for more competition in politics? Is that one?
No, I don't think so. That's the reason. Yeah. I think as far as India is concerned, this is a good pivot. But I'd say as far as India is concerned today, what's happened is that the entire world today has a monomaniacal focus, which is AI. That's all the world is all about today, which is that which countries are the winners of AI, which countries are the losers of AI. Unfortunately for India, in contrast to what happened in the tech boom in 1999-2000, this time, as far as AI is concerned, foreigners have taken the view that India is a loser in the AI race. So that's the view.
Do you agree with that view?
No, I'd say that just stepping back, why are people saying this? We are at the current stage of AI where the entire thing is about building the AI infrastructure, the picks and shovels, semiconductors, memory, the compute, that's the phase. It's a mad dash going on for that. India, unfortunately, just doesn't have that in terms of that. And this is, again, it comes back to some structural weaknesses, as far as we have had. And this is well known by now.
The government would take strong objection, and they did. In fact, I remember the IT minister Davos was posed the same question, and he gave a very strong response. I don't know how many people remember that.
The government can say what I want. I'm not saying this is right or wrong. Right. I'm reflecting to you what is the foreign investor sentiment on India.
Okay.
Now, you can say the foreign investor sentiment on India is wrong. That's fine. Okay. I mean, they're not they haven't been right.
Fair.
Yeah, but I'm saying that, and the numbers do the talking, right? You can say whatever you want. When, foreigners in the last couple of years, just in the stock market, have sold $50 billion.
Right.
When your net FDI number is 0,
right,
it's foreigners doing the talking. So now you can say foreigners don't matter, foreigners are wrong, but you can't argue with the data. Now, my thing is, why are foreigners doing this,
yes.
right? Because I, as someone who has invested in India and started my career in India, want nothing more than foreign capital to flood into India.
Correct.
Because it's great for my business, it's great for me. I feel very proud of talking about India when I'm out there. Today, as I say, that as far as India is concerned, in my 30-year investing history, what I can tell you categorically is I've never seen such indifference towards India, right? So which is the fact that, as that old line goes, the opposite of love is not hate, it is indifference.
Indifference.
And so,
being ignored.
Yeah. So in 2013, when we had the Fragile Five, it was hate. People were like, in terms of it. Today, it's just indifference. You cannot, chat about India because people just aren't that interested in it because they are just focused on one thing for now, which is AI. And the fact that do you have AI or you don't have AI in terms of the entire compute, the structure, the infrastructure for it. And here the structural weakness of India shows itself up, which we've spoken about, that the amount of money we spend on research and development in India as a share of GDP, again shows our priorities, is 0.6%. Korea, Taiwan, which have become the two biggest beneficiaries of the AI boom in the world today, right? And they are sort of on the cusp of being emerging or developed markets. They spend 4 to 5% of GDP on infrastructure. The number one, on
R&D.
Yeah, on like R&D. Right? And then the number one country which spends the most on R&D
US?
Is Israel. Israel is number one. US too is about 3% but on such a large base. So if we're going to spend that kind of money on on R&D, then the bill will come due someday. And I think that's what's happened, which is that this was always said, by the way, for a long period of time, that our IT is just doing an arbitrage business. It's not actually doing innovative stuff. And we lived with that. But today that is coming back to haunt us a bit because we don't have any of that. So that is the reflection today, that the main reason foreign investment is not coming into India today because the entire focus is on AI. And that's also something which is helping America continue to get away. In fact, like I wrote a piece when I remember sort of saying this, which is that which I think that you discussed as well, which is that America keeps bailing out Trump, which is that the big question, apart from, like you said, about two popular topics were the war and the thing, but no discussion now gets over without Trump and stuff.
Trump, right.
And the whole issue that like everyone asks is that how is America able to get away or how, with
Yep.
all these kind of stuff which is going on. Everyone talks about the fact that America is doing this wrong and on, and like, as I said, but the bottom line is this, sitting here in India when I travel in Singapore, that all these investors, they love to, or about people, they love, including, housewives with interactive broking accounts in Singapore, they love to bitch about America all day and then buy America all night, right? Which is the fact that all day they'll do that, but like all they're going to putting their money is into America, and most of it is into what these tech AI plays and other things. So that's just what it is, which is the fact that because we are currently, I think this is an AI bubble, and we can speak about that later.
Yep.
But the fact of the matter is that as long as this massive focus on AI continues, America is able to get away. Trump is able to get away with a lot of his actions just because he looks at it. My stock market is like an all-time high. My economy is growing at 2.5%. What's the problem? Foreign, like all these articles are written about America's debt and America's dollar and this and the other, yet foreign capital keeps rushing in. Just last year, I think that about $1.6 trillion was invested in America. We were losing, I'm talking about portfolio, other things. We were losing, they got $1.6 trillion, which went into America last year. They look at those numbers and they say, and the whole thing is hinging on one thing, which is AI. And India, unfortunately, is not seen to have any AI plays at this stage. This can change. We can get to a different phase of adoption, of having applications where India can end up becoming a beneficiary of AI. But the current reality is this.
The 5-layer cake of AI: energy, the data centers, the chips, the applications, and the models. All 5. The government is put in as much support as possible. Private enterprises are involved, are investing also in them. So, I mean, if you are saying that foreign capital is leaving India because they're only interested in AI, they'll be leaving every country, right? Why only India? Because there are only 3 or 4 countries that are actually playing the game on the front foot right now. So are we saying that therefore there's concentration?
Yes, absolutely correct.
What if getting away felt this easy every day? Breathable, lightweight, crafted to move with you. Each shirt carries the mark of tradition, taboo resist prints, deep indigo dyes, and the timeless rhythm of hand block printing. Even today, wearing handcrafted shirts is not just a style choice. It's a quiet return to our roots. From slow mornings to sundown plans, one shirt, endless ease. Your everyday getaway shirt, Jaipur. Reclaim your roots.
Weight is greater than all of India put together. Right? So it just tells you about the thing. And then you look at Korean companies, Samsung, right, which has been around for a long period of time. It's made a huge comeback because of its semiconductors and like the memory and stuff, that the profits Samsung will make this year will be greater than every single American tech company except NVIDIA. Greater than Amazon, Apple, Alphabet, and all that. So currently
These companies
that's
are the customers for Samsung, right?
Yeah,
For these,
exactly. So they desperately, so what's happening is this, in America, there's a mad rush on to win the arms race, right? So everyone's got their own model. It's, in terms of OpenAI is now, in fact, cracking in terms of their popularity. You have instead Anthropic, Gemini. These are the ones which are doing like really well. But whatever it is, everyone is desperate to, like, for the fact that we have to win the AI arms race. And the biggest beneficiaries are the people who have that infrastructure to help them win the AI arms race. So those are the countries which are benefiting the most today. So this is, I totally concede that this feels like bubble behavior when everyone is just running around, like this feels like 99 where everyone's just running around to sort of get the thing. But unfortunately for us in 99, we benefited from the big tech boom there because the IT services businesses and the TMT boom, some media companies, all those were there. We had those companies. So in fact, the Indian stock market had a huge surge in 99, 2000. This time, unfortunately, we don't have that. And now we are, in fact, among the financial crowd, we are being called the anti-AI play, which is that the moment this AI bubble ends, then we are hoping that we will get some attention again.
So okay, I didn't realize it was that bad. So what, the domestic consumption, all the government spending that's happening, all of that is counting for nothing for foreign investors at all?
at this point in time, it's not as if the fact, I mean, so I'm saying at this point in time, this is the reality.
Okay.
Now, I believe that this too shall pass, right? As we said, that at some point in time, this mania can't continue. You can't have the entire global economy being run on one factor.
Correct.
That's the sort of heady space that we currently are. But at this point in time, that's what's happened. So we have gone, and the game has shifted. And this happens, like even in India, when we would speak to politicians and we would tell them, like even a year ago, that listen, the wind is shifting, and when the tariff battle was going on and stuff, the attitude then, or as some of the senior people too, was that we are a country of 140 crore people or whatever. Where else will people go? This is where the consumption is. This is where it is. Well, not really, at least not for now. But so I think those stories will play out. They will come back. If you want to be a true contrarian, this could be a time to look at India and stuff. But that's the view. The reality is what I'm talking about.
What happens to China now? Let's move to China a little bit, because 4 years ago, the Adda that we did, I think had just started talking publicly about becoming bearish on China. 2 years ago, the Adda we did, China was flat. So your prediction or your forecast on China was right. Where are we with China right now? Because we've spoken about America, spoken about Taiwan and Korea, but China is the place.
It's a bit mixed, you see, because as far as China is concerned, I think that there are a couple of issues as far as China is concerned. One, I think that this is, again, like I keep going back to the point which sort of bothers me at some level as well, that why is Trump and why is America able to get away with everything that they are doing currently? Because the war is going on in the Middle East, the biggest people who are suffering, like in America, where I sort of spend most of my time, the war is very much a TV war, right? It's there happening in television and stuff. No one's really feeling it on a daily basis. Some gasoline prices have gone up, but most other prices, product prices, whether it's jet fuel or it's got to do with electricity, energy and stuff, they're in like surplus, it's not happening. So the rest of the world is suffering the consequences of America. And then my point is that one of the biggest problems is the fact that China is just not being able to step into that void, this should be like a golden moment for China. And it's not being able to do that. And
it's saying it doesn't want to. It's saying it doesn't want to be the global currency. It's saying it wants to still be a currency that's an export-driven country.
Yeah, exactly. So that is the problem, right? Which is that
so it's not able to, doesn't want to.
I think it's not able to. Because we have never had this thing. If you look at the history, every 100 years, we have seen a situation where some new power rises, and that currency of that power assumes a much more significant role. This happened, when America rose to overtake sterling. Before that, it was sterling rose to overtake the French currency. Before that, the French overtook from the Spanish. Before that, from the Dutch and all that. So that sequence has gone on for 500-600 years. This time, what's happened is that the financial hegemony of America has not only lasted so long, but is disproportionately high. Like if you look at just in global transactions, the usage of the dollar, America's share in the global economy is about 25 to 30%. But the dollar's usage, if you look at transactions and all that, is close to 90%. The Chinese currency is like barely registers 2, 3, 4% or something, even though China's economic size is 20%. The issue is the fact that the Chinese growth model, the way they've built it up, is heavily being done on debt and heavily being done by pumping lots of money and liquidity into the system. So the fear the Chinese government lives with is that if we open up the country and we make the currency convertible, which is what will allow capital to go in and out, which is what you need for a currency to be globally accepted, you will end up getting a massive flood of money which will leave China. So it's the brittleness of Chinese growth model which is being exposed here, which is why the Chinese currency is just not acceptable to global people, and which is why also that China is not being able to fill in the vacuum which should be filled in by like the US, like a small country, which is my favorite country I speak about. We did last time, Switzerland. Yeah. Look at that currency. Look at what you can do when you manage that, and how people. I think that if you look at global FX reserves, people are more comfortable holding the Swiss currency than holding the Chinese currency. That just tells you all you need to know, right? In terms of the fact that because China's growth model is so brittle, so debt dependent, and so much liquidity, they can't make their currency freely convertible. They can't make their currency freely convertible. It's not being able to pick up the void that the US is possibly leaving. And the US financial hegemony remains great. So therefore, the US can decide tomorrow, you can't, if you buy oil from Iran or Russia, we can sanction you, we can do this, because they have used their currency as a complete weapon,
right,
which no other country is able to do.
So China is buying more gold. Apparently, the news from China always, we don't really know beyond a point how accurate or not. But the sense we get is China's buying more gold. They're buying more foreign. They're buying foreign government bonds. And so, given the behavior of China and that nexus between Russia, China, Iran, and North Korea that was building up in the before Trump, or just when Trump got elected, that alliance also seems to be kind of waning. Can we say that whatever madness or whatever chaos that's happening with the war in Iran, the US-backed war in Iran, US is winning?
Well, I'd say the fact that that's the paradox. So that is the paradox so far. I won't say it's winning, but I would say, unfortunately, it is losing less than the rest of the world. No one's winning in this, but it is losing less, right? Because of the fact is that it's not that dependent on the world for its energy needs. And it is at the heart of the AI mania just now. So the US is not feeling the impact of its actions, and the rest of the world is suffering much greater consequences. Like in Asia, like in India, we speak about gas shortages, people going back to the villages because of what's happening, like here with the restaurant business and stuff. But in places like Philippines, just work from home. You can really feel the effect. And the longer this goes on, the worse it is going to be. So no one's going to win with this, but the longer this lasts, the more the rest of the world ironically loses compared to the US. And that is the paradox of this entire situation.
But is Iran, there is a narrative that Iran actually is doing much better than it did before the war started. It's the same family who's controlling, they've got the straight. So if you just go only in that one Iran-US conflict, do you believe there is a narrative that Iran also is doing much better than anybody expected?
Iran has been able, I think, there is, sort of the fact that they've been able to stand up much better than what people thought. But let's not confuse that with success, because the economy is a complete basket case, right? That economy is devastated. It's not coming back, and they themselves said so. That's going to take years for them to develop. But I think that which probably Trump or other people didn't calculate, their reaction functions very different. It's not, they have been off the economic map for a long period of time. So the fact that they'll remain off the map or for a longer period of time seems to be not something which is bothering them. Whereas I think for people like us, or even America, which is, even here in India and stuff, for us economics matters. But for them it doesn't matter, because it's been a basket case for a long period, at least from an economic perspective, for a long period of time.
And you've written recently about this, that this energy crisis, if this war continues for a couple of weeks more, or even a month more, it's going to be very different from the last time, because every country is operating on a lot of debt. You said China has grown a lot of debt. Even America has grown on a lot of debt in the last 5-6 years.
Yeah.
So just walk us through how, if this war continues, what kind of happens? How is it different from the last time?
Yeah, no, firstly, the world is short on a daily basis. I think the global production of oil is about 100 million barrels per day or something like that. And every single day we are short 5 to 7 million barrels a day that the war is going on. These are staggering numbers, right? To be short this long. So if the war continues and the strait is not opened, there's only one way that the oil price is going. It's going up. You need to reach to $150 or something to be able to demand destroy, right? The only way that you clear it, if supply is going to be 5 to 7% on a daily basis is cut, the only way that you sort of do that is if you end up in terms of if you end up cutting demand in a huge way, right? So that's the thing. Now, in terms of the fact is that if this were to happen, obviously the effect is going to be felt every single place. the point I was making, which is what you like referring to earlier, like in my FT columns that I've written, was that the world today has entered this in a very different space, which is that we have record levels of debt, and countries are running very high deficit levels. Like the US is running a 6% budget deficit. Normally, what happens is that when you enter a crisis, you generally sort of, have, especially
Some
after you've had a
firepower.
long expansion, you have a buffer. This time there is no buffer, and we can see that in terms of long-term interest rates. Like whether it's so, in the last, it's been exactly now 2 months since this escalation started.
Right.
In this 2 months, interest rates everywhere have gone up. The magnitude has varied. UK being among the worst. US, even the US,
Yeah.
the 10-year interest rate is like up about 40 basis points or so. Normally in a crisis, what happens is interest rates tend to come down because there's a rush to safety. People sort of do that. This time, the big difference is that interest rates have gone up despite some sense of a crisis.
And markets have gone up in most countries.
Yeah, but markets have gone up in terms of, compared to the thing, again, it's mainly the AI-driven markets.
Okay.
But in the last few days at least, Europe, India, many Asian markets have started to slip right back. There was a rush up and down on optimism that this is going to end.
Yeah.
But as this is dragging on, the markets are beginning to fade there. So this is a very short-term thing. But long-term interest rates, if you look at it, those have been stuck and sticky ever since the conflict began. Those really haven't come back down compared to where the crisis was. So that is telling you something, which is that people are really concerned, or the concerns are growing, not really concerned, the concerns are growing that you don't have enough money, and that you're going to keep coming to the market for more and more borrowing. So the ability for governments to try and calm the situation by giving handouts, more stimulus, is quite limited. Even in India, the 10-year, has gone up since the year began, and especially since the conflict. So the ability for us to be able to do this is to be able to withstand higher oil prices with the government giving handouts is very limited this time. That's the point that I was making.
And it seems like we're going there, right? So what happens, Ruchir, if oil stays at above $120, $130 a barrel? What happens? I mean, are we talking global recession? Are we talking everybody suffers, but America will still be fine? Is that
No, even America will suffer, but it's a relative game that Europe and Asia will suffer more. And so therefore, I think that this is where I feel the lack of, in terms of responsibility, especially from Europe again, right? Which is that America created this problem. That's their argument.
Correct.
Fair enough. America created this problem, but it's impacting you.
Yeah.
So I just wish these countries would take much greater initiative
What should they do?
in terms of whether it's coming together to put more pressure on Iran or wherever it is, even America, to try and open that strait. Because of the fact of the matter, it's hurting them the most. It's like China, for example, did something pretty smart here, which is that they built up massive amounts of reserve. Just in terms of when prices were low, they bought massive amounts of oil, so their reserves are among the highest of any country that I know.
Okay.
So they're able to withstand this a bit better, but I still feel it's complacency. At the end of the day, they'll have to come back and buy it back at some point. But so I think that, and this is what, again, I think the analogy to use is this, just having been a wildlife safari like person, which is that we see in the jungle, there's the king of the jungle. And now we have the law of the jungle. The only way that you survive among the so-called less powerful animals in the jungle is if you move in a herd. If you're going to move alone, you're going to be picked. And that's what Trump has also done very smartly. Last year, I remember I'd get phone calls from the Indonesian, Philippine governments when Trump came, what should we do? Trump is coming, tariffs and stuff. I said, at least have a coordinated strategy with each other. Because if you deal in a coordinated way, then the tariffs, then there's something that you can do about tariffs. Instead, if you go individually deal with the US, you're always going to be on the losing side. Because that's the king of the jungle, right? So they're gonna eat you for lunch and breakfast if you do it individually. Come together, and then all of a sudden the might is greater. So similarly on this oil stuff, I think that the powers, whether it's India may not be that up there just now, but the Europe, China, they need to have a greater sense of urgency that we need to see this end. Rather than saying, America created this problem, let America sort it out, we will come in. No. Every single day that this lasts, for whatever reason, between America and Iran, the biggest casualties are countries in Europe and Asia.
And I just wonder if I just feel like they all believe that there's nothing they can do because of what happened.
If the future were to whisper its secrets to us, and if we could reach out and touch them, we would weave those voices into something to share with the world. Nippon Steel Engineering.
Right? Because we first had to deal with the fraying of relations with America with the tariffs and the tariffs going up, which
Right.
which hurt. Then we end up getting this AI mania, and we are seen to be on the wrong side of the AI. Then we end up having the whole Iran conflict, right? Because we are a big energy importer. The countries which are doing relatively better in this, I mean, if you look at the world today, it's divided, as I said, mainly between AI winners and AI losers. And the other division which has happened the last 2 months is countries which are energy exporters and countries which are big energy importers.
Right.
So Latin America, for example, they're holding up well because most countries there tend to be energy exporters and stuff, but not true of countries in Asia, many of them and there. So that's the third. And now we also end up getting stuff like the fact that we have the El Nino, like is being spoken about as the factor. So it's just
Bad
like,
monsoon.
seems like a lot of things, unfortunately for us, have come together. Now, people say that, like in terms of that, what can you do in this environment? Well, firstly, there's not much you can do because even if you think that that you're building all this AI capability and stuff, for it to actually come through, will take a while. It's not gonna,
of course.
It's not gonna, just happen immediately that you switch it on. What the government can do at present is to think much more about the fact that how do you get foreign capital back into the country? Maybe you need to cut taxes. What incentives do you give? How do you get foreign? Because at the end of the day, we do have some great companies. We do have some, great investment stuff. But I wish the government would think about that as passionately as they think about winning elections, right? Because, that's what I would like to see. That, okay, we have to really figure out how do we get this foreign capital back in here, rather than, like the idea that, eventually, where else will it go? It has to come here.
Okay. Domestic capital has been something of a concern. Also, the amount of domestic capital being deployed in India has been something of a concern. Publicly, government has been talking about it for a year. I mean, almost like 5-6 years I've been hearing this rhetoric. Why do you think that's not happening?
Well, we've discussed this in the past. I don't want to, beat this, but I think that the two things here, right? Which is one is the fact that you've had, as I said, that for some reason businesses still feel that, so what you're referring to is private capex.
Private capex.
That private capex is taking a long time, like it's just not picking up. Because as I said, it's still a very difficult place to do business on the ground, whether it's the regulatory framework that we have, it's the investigative agencies, or the entire daily sort of toll that you deal with. It's a very difficult place to do business on the ground. So I think that that's the reason.
That's the main reason why you think?
I think that's the only reason I can think about, because I think the government has, taxes have been cut, interest rates were lowered, right? So, that's the only thing which I can think about. Now, having said that, as I said, that I feel eventually that, I've seen India much too long, and I don't want to get too bearish also on India, because it's a country, as I said, that consistently disappoints the optimist and the pessimist. That's always been my line about India.
Right.
2 years ago, it seemed as if, a lot was going right for us. So it was disappointing the pessimists by the stock market kept going up, and it seemed like this was the only country.
It was the most expensive stock market in the world when we had the Adda last year.
That's right. And that, 2 years ago, and that was a note of caution I sounded then, that listen, all these guys are putting money in this market, but it was all being led by domestic investors. Foreign investors even then were hardly there. The domestic investors were doing that, but they were buying the most expensive stocks in the world. And now 2 years later, unfortunately, the market hasn't done well, but it still ranks as the second most important, expensive market in the world, or maybe third. Now with US,
America's
and Taiwan,
most expensive.
US and maybe Taiwan's got in there now.
Okay.
So we are still So we were that expensive to begin with. So that's part of the
And
reason why
China
it's
is one of the
taken-
cheapest amongst the big
China's
economies.
always been cheap, right? So that China has always been cheap because one thing I figured about China, and we discussed this internally with my own team and stuff, that it's very hard to make money in that country. It's very hard.
So you wouldn't bet on China even now?
Yeah, I'm saying that maybe selectively, but it's very hard to make money in that country.
Interesting.
You know, because of the fact that in fact, they've almost the opposite. They overinvest. So as an investor, they don't care about your returns. They like overinvest, you know, like out there. So I remember like one of my colleagues, he's probably here, he went to China recently and he was all dazzled. We were all dazzled because at the technology and you look at the number of EVs on the road and stuff. But then, you know, we looked at that sector and I think that the conclusion was that as far as competitive intensity is concerned, this is like Beirut. You know, they're just so competitive that everyone's killing each other.
Okay.
So that's the problem there. Now you can argue that's a different model, but it's so competitive. There's so much investment which they do in any sector that they like, that as an investor to make money in China is very difficult.
Okay. I'm going to go to rapid fire, Ruchir. Then we get some very super audience here to get some audience questions. But I was going to sit over there, I think. So can you just pass my rapid fire questions? There, that note right. Okay, let me see. I got it.
If I'd seen this earlier, I would have been prepared. Right?
Where's the fun in that? Okay, so you know rapid fire, so have fun with it. Ruchir, you have $1 million today to invest. Where would you put it? In a rapid fire way.
No, I'd say that, you know, like the world today is the fact that there are, you know, like, I still feel that you have, like you begin with America and figure out how much money you put in America and then you figure out the rest of the world in terms of where you put.
Okay.
So I still feel, you know, like it's a very basic asset allocation question that we deal with all the time, that we typically put 60% in equities, in global equities, 20% in what we call inflation hedges and 20% in deflation hedges. And let me just, you know, for the audience, let me sort of illuminate that a bit. So which is that the worst returns in the next few years, it seems to be, is going to be from bonds, fixed income.
The worst returns.
Yeah, because I feel that, especially bonds, because government bonds, because these things are absolute, you know, because the governments are going to keep spending until they run into a crisis, right? So that's what you put least that you need to put to earn your interest, and you keep it going. But that's the thing. But so the normal thing was to put 60-40 used to be the normal model. 60% equities, 40% bonds. We all grew up with that conventional thinking. Right. I think that we've broken it up, that you put 20% only in bonds and fixed income, and 20% instead in what we call inflation-protected securities, and in gold, commodities, and other things, which will all do well in an inflationary environment. So I'm generally looking for some sort of the fact that fixed income is unlikely to do that well, inflation is going to pick up, so you should do that. So that's the rough, what you call split that I want to give you.
Perfect. Deglobalization, reglobalization, whatever you call what's happening right now, which country do you think stands to gain the most? You're still betting on America?
No, I mean, I feel that America has, in terms of the fact that there are all sorts of debt problems issue as far as concerned, and today, it's doing, what you call well. But I just feel that the countries which will do well in the next will be countries which get there, will be some of the middle powers which are able to negotiate this. Currently, it's a very difficult situation because until this energy crisis subsides, some of these middle powers are getting very badly hurt.
Right.
But I feel that a once-in-a-lifetime opportunity is coming to invest in some of these. In fact, I wrote a piece as well on this, that you can do whatever AI, but some of the quality stocks in the world, and I define quality as stocks, which are very good brands, trading at cheap valuations. Those are the stocks which will do very well, and the countries which have those stocks, those investments will do very well. So, I don't have a country in mind at present, but I have a whole basket of stocks which I think are these quality stocks which will do very well in the next few years.
And they're not too expensive right now.
They're cheap historically, at least, especially outside the US.
Okay, super. you've done a lot of forecasting, so I'm going to try to ask you to just forecast. Just tell us the future of. I'll give a topic and you tell us in short what do you think the future of this is. The future of Indian IT companies.
I think that they'll be there. But in terms of the fact that it's there, I think that like in terms of that the big ones have an opportunity like to maybe reinvent themselves. But I think they'll be there. But currently, I have no money there. Because I just feel that it's, to use a friend's, like a colleague's term, it's like Beirut. So I don't have any capital today in that cohort.
Okay. Future of gold.
Again, I've always liked gold. We have spoken about gold in the past. Problem is that it's become everyone's favorite for a while.
Right.
And I'm naturally not inclined to buy more when everyone is sort of saying the same thing. So I think gold should be there in your portfolios. I would recommend like 4 to 5% of your overall portfolio should be in gold or something like that. But I would not put more than that at this stage of the cycle.
And gold is gold, not silver, not copper, aluminum, none of that.
No, those are separate. I think that you should have commodities in general.
Okay.
Because I think that this is a friendly environment for commodities.
So gold 4%, 5% concentration.
Yes,
okay.
yes.
Fine. What do you see the future of India's billionaires today? The people who are billionaires in India today?
No, I mean, the healthy thing about like any country should be churn. What I would like to see in India for capitalism to truly work, and this is a part we discussed when my previous book came out, a fundamental problem with capitalism is when there's not churn. What I would like to see is new and new billionaires rising, and we have seen that. So I'd say that the odds are greater to bet on new and upcoming billionaires than to side too much with the existing. So I think churn is going to be the key thing if India is going to truly prosper.
Okay. Future of private credit.
Bleak. Because I feel
seems to be bubble category also.
Yeah, because it's here to stay, and the regulators wanted some risk to move out of the banking system and move to the private credit. Now again, which country are you talking about? In America, what happened was there's been a lot of private credit lending, but it hasn't been stress tested. And I know lots of people have bought into this logic, very naive, that, we're getting 10, 12%. Like, what's the problem? Yeah, but that 10, 12% hasn't been tested, which is that when you get a down cycle,
right.
some of that is going to go to zero.
Right.
So, I'd say that India may be a bit better because we haven't had such a private credit cycle, but at least in America, I feel the future of private credit, private equity is quite bleak.
Okay. In the Indian stock market, Ruchir, in COVID, there were 5 crore demat holders. Now there are 18 crores. So a lot of people here have never seen a downside. So where do you see the future of Indian stock market overall?
I think that, given the fact that I still expect India's nominal GDP, as we think about it, to grow at about 10%, 6%, let's say, GDP growth, 4% inflation, unless this AI is really, going to come and kill India's growth story forever, which I don't think. I think that that's the moment now. I think that's not thing. I still feel that the stock market here will give you decent returns. But remember that it's long periods of feast and famine. I've lived through this, right? I started my career in India, my professional career as a kid back in 94. And we did, between 94 and 2003, the stock market went nowhere.
Okay.
Right? And then from 2003, of course, it took off, and then, it's had, things there. So it's entirely possible for the market to go through long periods where the market does nothing, and we have to be prepared for that. If you've got the patience to be prepared for that, I think that the fact that you're a growing economy, 10% nominal GDP growth, means that over a 5-10 year time period, generally the market will do okay. But we're coming off being the most expensive market in the world, so we're just washing away some of that excess valuation just now.
Okay. What's the future of the Anthropic, Gemini, OpenAI fight?
I think that OpenAI is clearly sort of, cracking, right?
Okay.
And I think that this is a very important question. You've done. I know I'm supposed to in rapid fire be quick,
have fun
but I
with
need to sort of
Just
say
take
this
your
to you,
time.
which is a very important investing lesson that I think that I've learned over time.
Right.
Which is that if you look at every single technological revolution in history, what's very clear is that the incumbents rarely win. So, that's the thing about AI that people don't realize, which is that if you looked at, back in 2000, except Microsoft, all the big stars of 2000, the internet revolution was real. It stayed. But all the big winners of that revolution basically died. In fact, I think that Intel just hit the same stock price. It was, I think, 25 years ago. It just hit that stock price yesterday. So that's the point, which is that what happens typically is that in any of these big tech revolutions, you get massive amount of overinvestment, which is great for the consumer.
Right.
So the fact that all these guys are doing all this is fantastic. But very few of them are going to actually make money.
Okay.
So I think that I, again, would not put any money into these because I think that the competitive intensity is great. I think that already OpenAI is approaching as the first sort of crack in this, but that's the whole thing about technology, that you're just going to keep getting churned. So big believer in AI as a technology, or in every tech revolution, the incumbent very rarely makes money.
I think the incumbents have read your column, right? Because they have bet big on these guys. So Google has bet on Gemini, and Microsoft on OpenAI. So they've not even bet on one. They spread their risk. They bet on several AI companies. Even then, you think the incumbents are going to have a hard time to recover?
I'm saying that that's the history.
Right.
Now they've figured out. They're smarter than I am. They figured out who's going to win. Fair enough. I'm saying for the general crowd, just remember one lesson, which is that incumbents. Now, remember back in 2000, Cisco was the smartest company in the world. Right? But it's not as if they invested in lots of companies and all that. So Samsung was, even back in 2000, was a great company and stuff. But then it took 20 years after that for Samsung to reach the same stock price. So these things, that's just the way it functions.
Okay. The future of the BJP.
No. I think that the lesson that we learned was that I think that the BJP has shown much greater staying power than we had expected, because of the fact that when Modi suffered a setback in 2024, I think a lot of talk was on how the BJP would, if you look at the forecast, and first, a lot of people missed the fact that the 2024 election was going to go like the way it did, and some of us were luckily, at least, spot on that. But after that, a lot of people started to extrapolate that how it's going to lose one state after another. And I think that what we saw there was that how the organization really kicked in, and they were able to win those state elections after that.
Right.
So this is here to stay. But this is what I always grapple with, the big dilemma as far as India is concerned, and it just strikes me, which is what makes the BJP so powerful. That if you look at the politics of India, on the right, there is no competition. Anybody who has a right-wing ideology has one party.
Right.
On the other side, there's so much competition, and that vote gets split. Even the so-called Muslim vote, that fine, in every state, someone sort of has the Muslim vote. In Bengal, it's with Mamta, but even there, she's fighting the insurgents, like someone like in AISF, AIMM, they're all there. They're all like nibbling away. The BJP has no competition.
तुम इधर ही रुको, मैं ट्राई करके आती हूँ. ट्राई करो, बाय करो, ट्राई करो, बाय करो.
इसका छोटा साइज लेकर आओगे जरा?
इससे छोटा साइज है क्या?
और इसमें ये कलर में भी है.
बाकी सब रिटर्न.
मल्टीपल स्टाइल्स ट्राई करो, जो पसंद आए बाय करो. Zilo, fashion from home in 60 minutes.
Grouping put together, or the BJPs alone, is like never more than 50%. But they have no competition. On the other side, the 60, 70%, whatever, like you want to talk about it,
It's split by 3-4 people.
It's like split all over the place.
Yeah, fair. So what's the future of the INC, the Indian National Congress?
It's the same question which can be asked like all the time. And I think that as far as they're concerned, I think that it's going to be the same, which is that they're going to keep fighting with the regional parties for space. I think that's just the way it is. That, so I think that's what. So in fact, I said this to you before this election, that the most interesting election will be in UP, which is next year, not because I expect Now, even though Akhilesh, I think, it's great fun chatting with him. I'm not sure if he knows how, like if he's going to, even close to winning, but like he's a great guy because of the fact that the entire succession thing will start after that election. So that's what makes that...
Succession to the Prime Minister?
Yeah. I mean, in terms of, like, at least the talk will start.
Right.
That in 2029, who is it? We don't know what his mind is, but at least that thing will start. So the real interest in Indian politics, almost regardless of what happens on the 4th of May, when the results come out, is going to be there because at least there'll be some competitive dynamic within the BJP after that election.
Interesting. Okay, very interesting. Future US dollar, here to stay, waning a bit?
No, I think that the natural path of the dollar is down because it's very interesting that despite everything, the AI, everything happening, the dollar has been stable. Now both the bulls and bears can make their own case. The bulls can say, hey, despite all these people who keep saying negative dollar, as I said, like the dollar remains stable. The bears can say that even though the US is getting $1.6 trillion in capital and even though all this happened, the dollar is not being able to appreciate. It's basically been stuck for the last, like ever since, the last year, it's been completely stuck. So I think that the dollar is there, but I feel that this problem that I think the dollar slide will take place, but it's a lot slower than what it should be given the fundamentals of the current account, the fiscal, because there's no alternative which has emerged as a very big and the weakness of the Chinese currency that we alluded to. So it's here to stay, but I see that over time, people are looking for ways on how not to be that dependent on one currency in the world.
Okay. So react to the following news headlines: the divide in the Tata Group at Bombay House, the divide in the boardroom battle at Tata Group.
That's like a tough question because, because these are people I know very well there. I don't have any insight.
How does foreign capital look at that when a company the size of Tata has this kind of?
No, I don't think. I'm not seeing that as a discussion point.
Okay.
As I said, foreign capital first needs to look at India.
India first,
and then we can look at something within that.
Okay. There is news of UAE pulling out of OPEC. How do you react to that?
I think that in terms of the fact that that region we're seeing much more differences crop up. Like the one battle which has been going on there is between UAE and Saudi.
Right.
That was a big factor even in the UAE asking Pakistan give our money back.
Yeah.
Which, happened and stuff. So I think that we're seeing fragmentation happen in the region. Okay. I think that a lot of countries are realizing that we are on it, we have to look after our interests here. And so this cooperation, I think, is freeing because of that.
Okay. Ambani, Adani, Tata, Birla. The foreign investor, who's a safer bet?
As I keep telling you, first let foreign investors come back to India.
But okay, so for domestic investors, a safer bet?
No, I don't think. In terms of the fact that these are, as investors, you have to invest in a company, not in the overall thing. So each one has some asset which appears, which is, quite remarkable in terms of what the asset they have, and they'll remain. But I don't think that there is a foreign investor sit there and think that we're going to put money in X conglomerate versus Y. In fact, they're looking at companies. Foreign investors generally don't like investing at a conglomerate level. They like investing at individual companies because conglomerates usually trade at discounts.
Okay. Meta, Google, Apple, US Congress, or the Office of the President, which of these institutions do the US citizens trust more today?
Well, the polls are there, right? That it's a race to the bottom. So, in fact, someone, says so, which is that, but this is what US is, that the only people with lower popularity than Trump is the Democrat Party.
Democrat Party.
Right? So, so that's just the reality. Right. So it's a race to the bottom and big tech. But I think that obviously in terms of if people have to work somewhere, they'd still rather work for a big tech company than, sort of work for US government.
Okay. Who has a tougher job in India today? And I asked you this question last time as well. I want to know if your answer has changed. The RBI governor or the SEBI chair?
I think the RBI governor at this stage.
This stage, okay.
Yeah, because I think that you're dealing with like a big hole that you have to fill every day.
Okay. You've got 10 minutes with PM.
This is a question I've answered ever since I've had my encounters
but the world has changed now. The world has changed now.
I'm never going to, it doesn't matter.
No, one advice and one question.
No. Again, I find it very presumptuous on my part to give someone advice, someone, you know.
Okay,
and
I
they all
tried.
think that- yeah.
I know even last time I didn't get an answer
Yeah,
from you on
because
this,
no,
but I
they're my
said I'll
standard
try.
stuff because I feel that like there's no value because there's no one who listens to you, and you know, so you can sound very self-important, you know, by saying all this, but you know, they don't really care.
Okay. You've been driving through India for 34 years. React quickly to the following trends, how they have changed or not changed. Quality of roads.
So this is a very interesting question. I've always said this, that I started
I
driving.
thought Bengal was different from the trend. That's why I'm asking.
No, it's not. Because here's the rule of travel that I've done. You know, I wrote this book, Democracy on the Road. I wrote about this little anecdote there that as kids, we used to go to my mother's hometown called Bijnor, which is 200 kilometers from Delhi, right? Used to be a single lane sort of road as kids, right? I'm talking back in the 1980s and stuff. Single road like stuff. The time it would take to go from my home in Delhi, let's say to, or to drive from Delhi. I mean, the only way that you could do, like, a drive from Delhi to Bijnor, 200 kilometers an hour, used to be about 4 hours. Unless there was some breakdown on the way, 4 hours. Today, the time is still 4 hours. The roads look great for a while, but point to point, it's the same because the last few miles on both spots is so crowded, and even when you go along the road, the encroachments and stuff. Even in Bengal, we travel every state. Sure, for a while, someone will talk about some new expressway has opened, it'll take us 3 hours, Delhi, Dehradun is this and all that. You wait for a while. The rule of travel for 34 years of election travel, or my 50 years as, you know, like as a human being, is in India, every time you account for 50 kilometers an hour, point to point.
Okay.
That's the average. Hasn't changed in 50 years.
Okay. The transparency of the voter, do you feel that they are less open to sharing their political views with you today than they were 34 years ago or 10 years ago? Or?
You know, we've done this exercise so often now. Every time you ask a voter which way they're voting, they will smile. Almost as if you've asked them, you know, like, how was your sex life or something? You know, like they will smile, you know, like you said. And then you'll ask them the fact that, you know, like, who are you voting for? Their answer will be, bas, jisko dena hai denge.
Yeah.
In terms of that, then so the art we've learned over time is that most of the time, unless they're a hardcore activist and someone from the party, they're not going to reveal your vote preference very easily. Then you have to start asking questions. Aapne pichli baar kisko vote diya tha? Then they'll pretend that they you know, and then they'll say that humne isko vote diya tha. Then you try and decipher from their answers what it is. But the transparency is very clear. They consider their vote to be very precious, and in Bengal, this is going to be one of the big issues. As you know, when we like started driving down south, especially, you know, after we left Murshidabad, people were just not telling us, like, you know, who are you voting for? In terms of the fact people would, like, you know, the fact that they would just laugh and, you know, shake their head this way and go, you know, jisko dena denge. And then you ask them who's going to win the election, and the favorite dialogue everyone will say was, kaate ki takkar hai. Even when there's a landslide going on, they say, kaate ki takkar hai.
Okay. Only on Bengal, what do you think is the biggest threat to Mamta's chances of winning?
Anti-incumbency.
That's simple.
Yeah, the fact that she's been in power for 15 years, you know, like the state is, you know, like still there in a state of disrepair. So I think that it catches up. And, you know, this is so interesting. Again, I'm going to go back to the original question we asked. We sitting in Bombay are viewing this election in a very different way. There are people here who are pro-BJP and they want the BJP to continue being on the ascendant, and Bengal is a big frontier to conquer.